This is the World Financial Report podcast. My name is Randy Marshall. Joining us is our financial and diamond expert, Harold Siegel. Connect with Harold at 1-800-432-1022. His website is rarecoloreddiamonds.com. We're taping on Thursday, October 25th, 2018. Our time is 8:11 Mountain. Let's get into the numbers here this morning. US dollar at 96.54. Canadian dollar 76.44. The euro at 113. The pound at 128. Gold $1,232. Silver at $14.63. Gold silver ratio is 84. Platinum is 826. Palladium 1,091. WTI 66.98. Brent 76.37. Nat gas 320. The Bitcoin in US dollars is at 64.08. Bitcoin Canadian 83.84. Stock markets have been very volatile. Yesterday we had a big down day. To give you an example, the Dow last week when we were taping was 25,578. This morning 24,677. The Dow is down from its peak 2,368 points. The Dow is down for the year negative 2.4%. The S&P 2809, currently this week 2656. NASDAQ 7,600, this week 7188. The TSX last week 15,529, and it's now 14,909. The S&P is down negative 3.1% for the year. So we're seeing volatility in the bond market, the stock markets. Later in the podcast, we will talk about Paul Volcker saying that we're in very, very weird times. And he was the guy who was the head of the Federal Reserve back when interest rates were 15%. But this morning, domestic terrorism. Yesterday, there were bombs sent to former President of the United States, Obama, Hillary Clinton, and others. This morning, it's Joe Biden, Robert De Niro. That is domestic terrorism. You have a journalist over in Saudi Arabia being killed, Khashoggi. So it's a time now where we're seeing so many different things happen financially and geopolitically. And that's why we've always said you need to have hard assets. It's an insurance policy in your portfolio, Harold.
100% right, Randy. What a week. Unbelievable that these pipe bombs are being sent all over the place. Now, on the surface, it certainly seems like a Trump supporter is the one that's doing it. But you and I were discussing before the show that it could just be, a Democrat trying to get back at the Republicans type of thing. So we'll certainly find out about it. The FBI and everybody involved will certainly find out about it. But it's a crazy thing to think that that is happening. Now, the Dow dropped 600 points on Wednesday. I don't know if it was really to do with that, or is it to do with the fact that we're going to see another interest rate hike coming because there's inflation, and inflation is a problem to the economy. So as we keep raising interest rates here in the States, it's going to strengthen the dollar, but the rises in interest rates are certainly to do with the potential of strong inflation coming back. And at this particular time, at a time where we're so used to zero interest rates or extremely low interest rates, that could really hurt the economy in a huge way. But these pipe bombs are very concerning. We'll certainly find out, I'm sure, in the very near future who's behind this. But Volcker is right. We're living in very, very unusual times. And as things unfold, they'll start to make a little bit more sense to us. But just goes to show you how volatile the market can be. Now, the fact is that the stock market dropped this week, and it is negative for the year so far, which is going to hurt Trump because he, rests his success on how well the stock market's doing. So I'm sure this is bothering him tremendously. But we did see a rally in gold this week. Don't forget, gold has been languishing around the 1,200 level, 1180, 1190, 1210, but it did go up 16 and change. I think it was on Tuesday or Wednesday, and the market now for gold is trading at around 1230. So as things heat up a little bit, and as inflation comes. Now, one thing it could be, that we're seeing a little bit of action because of these pipe bombs and things like that, but the fact is, if we have inflation, that is going to be an issue and could really push up the price of gold. So we'll have to see what happens over the near time, but things are getting a little bit crazy, and yesterday and today, meaning Wednesday and Thursday, with these pipe bombs to De Niro because he made a negative comment against Trump. Just crazy things happening. I was telling Randy before the show started that here in Florida, I believe it was, these young girls in school were found with butcher knives, pizza cutters, goblets, meaning glasses, and their goal was, as young children came into the bathrooms, that they were going to kill them and drink their blood. And this is what's going on. You realize that after the Parkland shootings last February, there have been over 50 other attempted or thwarted shootings in the United States. So I don't know what this world is coming to and why in the world these kids are reacting in that fashion, but this whole world seems to be crazy right now with sending pipe bombs. I mean, the fact is that you're going to get caught. There's no way in the world that the FBI is not going to find out who did this, and it's just going to be another sensational story that is happening to us in the United States at this time.
Connect with Harold. Learn more about investing in hard assets. We're talking about gold, silver, diamonds. 1-800-432-1022. The website is rarecoloreddiamonds.com. And let's just get to it. Former Federal Reserve Chairman Paul Volcker, who has reached legendary status in the world of central banking, isn't optimistic about current conditions. When Volcker looks around now, he sees a hell of a mess in every direction, including a lack of basic respect for government institutions, a current Fed that seems to be following a completely arbitrary benchmark, he's talking about inflation, and a swamp in Washington run by plutocrats. At least the military still has the respect. How can you run a democracy when nobody believes in the leadership of the country? Now, he is very well known. He raised interest rates to 15%, brought inflation down. In a book set for release October 30th, Volcker laments the current state of conditions, particularly the moneyed interest eating away at the system of governing. There is no force on earth that can stand up effectively year after year against the thousands of individuals and hundreds of millions of dollars in the Washington swamp aimed at influencing the legislative and electoral process, he wrote. We know that Donald Trump is not happy with the current Fed raising interest rates, and Volcker remembered back in 1984, he had a meeting with the then Chief of Staff, James Baker, for Ronald Reagan, and was told the president is ordering you to not raise interest rates before the election. Volcker said he was stunned. So you can see this has been going on for quite some time. Paul Volcker, a legendary person in the world of the Fed, financial markets, coming out saying a hell of a mess in every direction. Very strong statement, Harold.
Yes, it is. And he was legendary. And he's a very, very smart man, so he would certainly know. And if we are creeping back into inflation, he was, the head of the Fed at the time of the highest inflation, which is obviously in the early 80s. So just a very frightening time. There's no doubt that Donald Trump is a controversial figure. There's no doubt that, he's causing controversy all over the world. But you've got a situation now where we've got inflation. That's why interest rates are going higher. Got a trade war with China. That's a major concern because so many corporations in the United States deal with China. So I don't see that going well. I just don't. And then you've got all these other issues that are happening. I think the country is really divided with him and against him. So it's certainly going to be interesting what's going to happen with the midterm elections and whether or not Trump is just going to be a one-term president. But I got to tell you, every single day, if you're living in the States, he's doing something that's causing controversy, and things are not great right now. People are very, very nervous. The fact is that the Dow has gone up so much over the last 10 years that people have made an awful lot of money that were able to stay in the stock market. But at this point, the volatility of 800 and 600-point down days is starting to get people nervous, and you're going to start to see money coming out of the market if this continues, and I believe it will.
Connect with Harold. Learn more about investing in hard assets. What is blockchain? Find out about investing in Argyle pink diamonds. 1-800-432-1022. The website is rarecoloreddiamonds.com. We encourage you to get our free weekly newsletter, the companion to the podcast. Doesn't cost you a thing. We send it out via email every week. You can go through it in minutes or spend hours. One of the articles we want you to read, written by William Pesic, Great Depression Ahead, IMF sounds a dire warning. Massive government debts and eroded financial buffers since 2008 suggest global dominoes await a single market crash. Is another Great Depression on the horizon? The IMF is very concerned, and they put this in a report about what's been happening in the financial markets. It's been 10 years after Lehman and the crisis, and it seems that really nothing has changed. There is a bit of a tranquil setting, cracks appearing in the markets everywhere, from Italy to China to South Asia, where currencies are cratering like 1998 again. The question is, Great Depression ahead? The IMF is sounding a dire warning. Read that article. Read the information in the IMF report. We're not trying to scare anyone. We've always said about the podcast, optimistic, pessimistic. No, we're realistic. And when we see a story like this, we want to pass it along so people are prepared, because you never know what can be happening. And some valid points are troubles in Italy with the banking system. China's stock markets are rolling over. You have currencies in the emerging markets that are cratering. Now is the time to be very, very cautious. We're even seeing it in our own stock markets. Markets pulling back in a major way. Interest rates, the projection of them going up dramatically. That is a recipe, Harold, for disaster.
You bet, Randy. So again, it's a time that, everybody wants to make money and everybody's concerned about making money, but, the volatility in the market and they're so speculative at this point that you really have to be concerned and think out what you're going to do. Is the risk worth the reward? And people get so desperate at times, which is understandable, when you're not making returns on your money, that they panic and they try to go with what's happening at that particular time. So getting into a stock market like the Dow, where it's been up for 10 years in a row, has gone from 6,500 to 26,500 without any type of pullback. You don't jump into that market. You wait for a substantial pullback, then you analyze what made that market pull back, and is it going to be a long-term or a short-term situation? I truly believe that at the present, even though that these situations seem dire, the Chinese situation will somehow straighten itself out. The inflation, it always straightens itself out. So the fact is that we could see the Dow drop a little bit further, continue to get volatile. However, this market is a market that tends to reboot itself very quickly, and unless something is directly hurting the stock market, it's not going to pull back that heavily. And don't forget, there's other situations out there aside from inflation and China and what's happening in Europe. You've got the debt, and the debt is in the trillions of dollars. So any one of these situations could cause the markets to fall. It's just at this particular point, it doesn't seem that that's what's going to happen in the Dow, because after a 20,000 point move on the upside, believe me, a 600 or an 800 point move is not a dramatic move for this market. If it was a 2,000 point move, that would be substantial. But with the height of the market the way it is right now, 600 or 800 points is not as dramatic as one might think. Now, 300 points in the NASDAQ is not something that we see too often. That was a major pullback, and I think a lot of that has to do with the fact that China and the problems with China and the U.S., the tariffs, is really going to hurt U.S. business in that sense.
Canadians are growing increasingly anxious about their ability to handle higher rates. The latest MNP Consumer Debt Index shows 1/3 of respondents fear they could be pushed towards bankruptcy as the cost of borrowing does go up. And that is exactly what happened this week in Canada. The cost of borrowing did go up. The Bank of Canada raised interest rates a quarter point to 1.75%. The third hike this year and the fifth since it began increasing rates in 2017. More importantly, its statement dropped references to taking a gradual approach and added language about the need to bring rates to levels that are no longer expansionary. They don't believe stimulus is needed. So what is normal? Normal is anywhere between 2.5% to 3.5%. They're going to be raising rates very aggressively over the next year and a half. So we're at 1.75%, more increases to come. They're going to normalize to up around 3.5%. That will hurt people. There are young millennials who have only known roughly 0% interest rates. I have a friend. He was renewing his mortgage and he said, they want 4%. Can you believe it? You should remember back about 20 years when we were looking at 8, 9, 10%, or even 40 years when interest rates are at 15%. But you can see how people have been conditioned, Harold. And as we normalize, and Canadians on a whole have a lot of debt, this is a major concern. It doesn't surprise me that a third of people are afraid they may go bankrupt because the debt they're carrying, interest rates going up, those two meeting, not a good scenario.
No, it isn't. Any time that you have big debt and interest rates are going higher, that's going to be a concern. In 1980, 81, 82, interest rates got to 22%. So you can imagine trying to buy a home, carry a mortgage, carry a loan, anything like that. It's almost laughable to think that people are objecting to 3%, 2.5%, or 3% interest rates when those of us that are in our 60s or 70s, remembered, 10% interest rates were normal. You could get 10% return on your money just keeping your money in the bank. Those were the good old days. But still, 10% interest rates today would cripple the economy, and there's just no way in the world that would work. So it's just funny that we're so used to much higher interest rates throughout our lifetime, and the millennials are freaking out over 1.5% or 2 or 3% interest rates. It's laughable.
And if you're a saver, like my mother, in a position you're retired and you don't want to be in the stock market, now finally interest rates are getting to a point where you can make a little bit of money safely in a GIC money market account, because let's face it, there was financial repression for so long. Interest rates held down to help out Wall Street, Bay Street, the financial markets. Now we're getting back to a point where somebody can sit in a GIC and make a little bit of money. And those who are in that position, thankfully for you, you're going to have a little bit more income coming in the future as interest rates continue to go up. Connect with Harold at 1-800-432-1022. The website is rarecoloreddiamonds.com. Get our free weekly newsletter, the companion to the podcast, Speak with Harold, about getting your name on the list. We send it out via email every week. In our Charts of the Week section, some good charts. Mom and Pop are buying the dip in stocks while pros are staying put. The Bank of America has seen the future. They say the U.S. stock market roller coaster is going to continue. Forget fallout from the midterms, a murdered journalist, Brexit, or a trade war. They say the reason to brace for enduring stock volatility may be the simplest. It's just time. Another chart. One of China's biggest asset managers prepares to dump stocks. China Everbuy Limited, a state-backed manager, and they manage about $18 billion in assets, said the company is preparing to sell some holdings on concern that valuations worldwide have peaked. There are 20 to 30 companies in Everbright's global portfolio that are ripe for exit. The Chinese are prepared to dump stocks. That is a major statement for sure.
It certainly is. Let's face it, things cannot be good in China right now. These tariff wars are killing them. Their business is sinking. Their stock market is in big trouble. And reports are they've got massive debt. So things are not great in China at this point. In actual fact, you just have no idea how good things are anywhere. The government lies all the time, and we don't know exactly, what's happening with the information we need to make an intelligent decision. So just looking at things on a broader sense, if interest rates are going up and every country is in debt and Canada and American citizens are at the highest debt level they've ever been at, that's a problem when interest rates are going up. Also, the United States has got the largest deficit in history, in the trillions of dollars. So obviously, interest rates going up there is a problem. I just don't see great things going forward. I see some, issues as we move, further into the year. But October has always been a bad year for a bad month for the stock market. So, to see the market fall off this particular month is not that alarming because most of the stock falls have happened in the month of October.
J.C. Parrots, I found this quote this week in a Market Watch story. He's a technical analyst behind the All-Star Charts blog. He said, "There is unlimited downside risk in the market right now, and I don't think it's being respected. It's not until afterwards that they ask what happened. When the bottom falls out, that's when the blame starts. The Fed, Trump, Ebola, whatever the excuse du jour is, that's what media outlets will regurgitate. The only one to blame is ourself." And if he is right, unlimited downside risk, not something that we are happy to hear about. Speak with Harold about protecting yourself in volatile markets with hard assets. 1-800-432-1022, the website rarecoloreddiamonds.com. Before we get to diamonds, wanted to mention quickly pot stocks. After it became legal in Canada, pot stocks have taken a major dump. Cannabis short sellers, they made $450 million on the first 2 days of the week. Harold, this does not surprise me. Now the realism of the situation hits. It's legal in Canada. Sure, we still continue to have lineups from what I understand because the product isn't there. They will get the product. But profitability, where is the profitability going to be? There was one company that came out and said, "We brought in $1.5 million in 1 day." Okay, great. What was your profit? Just because you brought in $1.5 million doesn't mean you made a profit. This is where it's going to be interesting going forward. Profitability, Harold, that's where it's important.
Well, that surprises me. How in the world do you go into a business as large as this and not figure out the profit margin? So makes no sense to me, to be honest with you. Makes no sense whatsoever.
Let's talk about diamonds right now. It's important to note that this is the time of year we have a lot of auctions. And Sotheby's Fine Jewels sale achieved $11 million. And that is a record. The sale was October the 17th. Now, one of the diamonds that caught our eye, an outstanding, beautiful pink diamond, 1.08 carat heart-shaped fancy vivid purplish pink diamond mounted on a diamond ring that sold for $483,000, well above the estimate of $350,000. So, Harold, you can see the early auction results for colored diamonds, rare diamonds, very strong.
Yes, and they should be. And the more volatile that the world stock markets get, the more that assets like diamonds, like art, like classic cars will go up. I had dinner the other night with a gentleman who's 75 years old, who's started off, his father was in the taxi business as a taxi driver. He, at a young age, got a job as a mechanic, and today has a collection of classic Bentleys and Rolls Royces that's over $150 million. So there's a lot of money put into these type of investments. Diamonds, there's a diamond coming up, one of the rarest pink diamonds. It may sell for as much as $50 million. So the fact is that, people have diversification. They may have X amount of their money sitting in a stock market, and a lot of that depends on your age too, because as we get to be in our 60s and 70s, we can't withstand a huge drop like we saw back in 2008 as easily as somebody obviously in their 30s or 40s. So as that happens, wealthy families tend to put money into harder assets that hold their value, that are not affected by stocks or the economy or things like that. So it doesn't shock me in any way to see that diamonds are selling for the prices that they are. And I just can't wait to see what that large, vivid pink is going to sell for when it does come up for auction. I think it's going to sell in the 30 to 50 million range. And for somebody to invest that much money on a diamond or on a piece of art or on a car, they've got to be convinced that that's a great investment. Otherwise, they obviously wouldn't spend that money. So the fact is that over the years that we've been bringing auction results to you, it is not unusual when these amazing diamonds come up for sale to see record prices.
On the last podcast, we mentioned the Moon of Baroda diamond, worn by Maharajas and Marilyn Monroe. It's going to be offered November 27, 2018 at Christie's in Hong Kong. It's a 24-karat fancy yellow diamond that captured Indian and Hollywood royalty. In 1953, the 24.04-karat pear-shaped fancy yellow Moon of Baroda diamond was ready for its close-up at 20th Century Fox to promote the release of the Howard Hawks film Gentlemen Prefer Blondes. Marilyn Monroe famously wore the Moon of Baroda while singing the film's signature song, Diamonds Are a Girl's Best Friend. We have pictures of the diamond and a picture of Marilyn that's autographed with her wearing the diamond that will go with it at auction in our free weekly newsletter. In 1990, the diamond was offered at Christie's in New York, realizing $297,000, nearly tripling its low estimate. Now, the current owner believes it could go for $500,000 to $750,000. As Harold and I were saying on the last podcast, we thought that was very low. Christie's, they found out who the owner was, the Moon of Baroda. They kept going back to him year after year after year. Finally, they said yes. Wow, what a stunning, beautiful diamond. And the Marilyn Monroe picture. The Marilyn Monroe picture, it is autographed. It's sort of neat to be able to get the autographed picture along with the diamond at auction, Harold.
Oh, you better believe it. That would be fantastic. Because a lot of these pieces do have provenance. For example, we have Elizabeth Taylor's iconic daisy necklace, which is yellow and white diamonds in a daisy design with matching earrings. It's a magnificent necklace. But we also own the provenance on it, which is a piece of paper, scrap paper, believe it or not, that Elizabeth Taylor sketched the necklace and earring set and signed it, and that, I understand, at Christie's was valued at over $250,000, and that was 5 years ago. So just the provenance, just the piece of paper, was worth $250,000 because it had Elizabeth Taylor's signature and her hand-drawn sketch of this piece that she wanted to build. So obviously the same with Marilyn Monroe. It's just an amazing thing, not only to own that ring, but to get that phenomenal picture with it.
Speak with Harold about hard assets. We really believe there's an opportunity with blockchain. Let him explain that to you. And rare colored diamonds from the Argyle mine in Australia. Pink diamonds. The tender for 2018 ended October the 10th. We're waiting for the results. They should come out at the beginning of November. Connect with Harold at 1-800-432-1022. The website, rarecoloreddiamonds.com. Here in Canada, we have Lotto 649. We also have Lotto Max. Lotto Max is capped at $60 million on Friday. There are what they call Max Millions. There are 55 Max Millions this week. So you could be looking at a lottery, if they didn't cap it, at over $110 million. But down in the United States, they did not have a winner since July. A single ticket in South Carolina won $1.537 billion, not million, billion, the Mega Millions jackpot. Unbelievable to think that someone will walk away with that kind of money. The winner can pick up a one-time cash option, which would be a cool $878 million before taxes. Otherwise, the full $1.5 billion minus the taxes would be paid in annuities over 29 years. Now, the South Carolina lottery sent out a message. Our message to the $1.5 billion Mega Millions jackpot winner: sign the back of your ticket, place the ticket in a safe location, speak with a trusted advisor, and call the lottery. Take a deep breath and enjoy the moment. Harold, isn't that something that someone is going to walk away with a bare minimum of $878 million? And I just want to go on the record as saying, I think I could live on that. I could get by. It would be a little tough, but I think I could do it.
Right. You know, the dilemma is, it's $1.6 billion. If you take $1.6 billion over 30 years, you know, you're bringing in basically $50 million a year, but you're not giving away $800 million. So but the opportunity, obviously, to get $860 million up front, less the taxes. Do you realize, though, and they've had many shows on this and stories on it, is that most people that win a large lottery are broke a year later because they don't know how to handle the money. You say, how in the world could you go, through 100 million or 800? Believe me, you can do it. So the other thing is about the lottery is that in every state, except for maybe 4 or 5 in the United States, if you win that, they're going to announce your name. So even if you don't want them to, they're going to announce who you are, because that's written in the bylaws, basically, of the ticket that you're buying, and they will announce who won it, which, could wreak havoc on your life. You got to start to learn the word no, but just an unbelievable thing. To win $1.6 billion is just an unbelievable thing. And the other one, the Powerball, is up to over 650 million.
Unreal. Yeah, I know in Ontario, they had talked about changing the law where a person did not have to have their name mentioned. I don't know if that went through or not. I'd have to verify that.
Set it up in a trust fund, a numbered trust fund, so nobody knows, and send the lawyer to collect.
If you are in that position, that's the least of your worries. If you won close to $900 million, buy an island with security, right, and you won't have to worry. As we get to the end of the podcast, the Toronto Blue Jays, and I remember it well. 25 years ago this week. Touch 'em all, Joe. October 23rd, 1993, 25 years ago this week, Joe Carter hit a walk-off home run, beating the Philadelphia Phillies. The Toronto Blue Jays won their second World Series. And Harold, we haven't been back since. We've come close a few times, but wasn't that fun? I remember that home run like yesterday. I just went crazy when he hit it. I don't know about you.
Oh, I did too. I remember it was my birthday weekend. I was in a limousine going to a club after dinner with some friends, and I would not get out of the car, out of the limo, until the end of that game. And man, oh man, was it exciting. Back-to-back World Series. One was a shortened year, but still we won it. That was one of the most exciting sporting events I've ever been involved in, and I remember it like it was yesterday.
Congratulations to the Toronto Blue Jays. They did have a reunion earlier in the year of the players who were on those two teams. Back-to-back World Series championships. I remember when they won the first championship and they said, the World Series trophy is going north of the border. Horrifying to a lot of Americans because that's their national pastime, and a Canadian team, the Toronto Blue Jays, won it not once, but twice. One of the autographs I do have on a bat is of Joe Carter, and I have a ball as well, much coveted. He was one of my favorite players. My favorite player was Dave Winfield, who played for the Toronto Blue Jays as well. And Harold did mention it. Birthday weekend. Harold, today is your birthday, so we say happy birthday to you, Harold Siegel.
Well, thank you very much, buddy. I don't feel 65. I feel good, and want to thank everybody for the good wishes. I appreciate it very, very much.
You are a baby, sir. 65 nowadays. My mother went to a birthday party for a 100-year-old man. And this is the advice we will leave with you at the end of the podcast for your birthday. How do you live a long life? The key to living a long life, don't die young. So there it is, Harold. That was the 100-year-old's advice to those young people in the audience. If you want to live a long life, the key to a long life, don't die young.
Well, thank you very much for the good wishes, my friend. Thank you for a great show. I wish everybody a wonderful weekend and a very profitable day.
Connect with Harold at rarecoloreddiamonds.com or 1-800-432-1022. Learn more about blockchain, Argyle Pink Diamonds. We'll be back next week with another edition of the World Financial Report podcast. Talk to you then.